Artificial intelligence, or AI, is rapidly changing the world, and finance is no exception. The financial sector, known for its complexity and fast-paced nature, is embracing AI technologies to stay ahead of the curve. From Wall Street to Main Street, AI is becoming an integral part of financial operations, reshaping the landscape in ways previously unimaginable. AI is transforming how we trade, analyze risk, and manage our investment portfolios. Traders now rely on AI systems to execute trades at lightning speed, often within milliseconds, capitalizing on market opportunities that human traders might miss. Financial analysts use AI software to sift through vast amounts of data, uncovering insights that drive strategic decisions. Portfolio managers leverage AI tools to optimize asset allocation, balancing risk and return more effectively than ever before. By using complex algorithms and machine learning, AI can process massive amounts of data, identify patterns, and make predictions with incredible speed and accuracy. These algorithms are designed to learn and adapt, improving their performance over time. For instance, AI can analyze historical market data to predict future price movements, helping investors make informed decisions. Data scientists play a crucial role in developing these algorithms, ensuring they are robust and reliable. This is revolutionizing the financial industry, making it more efficient, insightful, and responsive to market dynamics. Financial professionals can now access real-time insights through AI-driven dashboards, allowing them to respond swiftly to market changes. AI-generated alerts help traders stay ahead of the curve, identifying potential risks and opportunities before they become apparent to the broader market. This increased efficiency and responsiveness are driving significant improvements in financial performance. From high-frequency trading to personalized investment advice, AI is automating tasks, improving decision-making, and creating new opportunities for investors of all levels. High-frequency trading, powered by AI, allows for the execution of thousands of trades per second, maximizing profits from small price discrepancies. On the other hand, AI-generated personalized financial advice is making investment more accessible to the average person. Investors can now use AI tools on their mobile devices to receive tailored recommendations based on their financial goals and risk tolerance. This new era of AI-driven finance promises to be more competitive, data-driven, and ultimately more accessible to everyone. The democratization of financial services means that more people can participate in the financial markets, regardless of their background or expertise. AI is leveling the playing field, providing retail investors with tools and insights that were once only available to institutional investors. This increased accessibility is fostering a more inclusive financial ecosystem. However, it also comes with challenges, such as the need for robust regulation and ethical considerations around data privacy and bias. As AI becomes more prevalent in finance, ensuring the security and privacy of financial data is paramount. Cybersecurity experts are working tirelessly to protect sensitive information from breaches and cyber attacks. Additionally, there are ongoing discussions about the ethical use of AI in finance, particularly concerning issues of bias and fairness. Regulators are stepping in to oversee AI implementations, ensuring they adhere to ethical standards and do not harm consumers. Education and awareness are also crucial in this AI-driven financial landscape. Financial education workshops are being conducted to help individuals understand and leverage AI tools effectively. Fintech startups are at the forefront of AI innovation, developing new solutions that are transforming the industry. Global financial conferences are increasingly focusing on AI, bringing together experts and stakeholders to discuss the latest trends and developments. This collaborative approach is essential for harnessing the full potential of AI in finance. The future of finance is undoubtedly intertwined with AI. As AI technologies continue to evolve, they will unlock new possibilities and reshape the financial landscape in ways we can only begin to imagine. From AI-driven financial planning apps that help individuals achieve their financial goals to advanced AI tools used by professionals in futuristic financial technology labs, the potential applications of AI in finance are vast and varied. Embracing this revolution will require a collective effort from all stakeholders, but the rewards promise to be transformative. AI is changing the game in financial markets with algorithmic trading, where computers make trading decisions based on pre-programmed instructions and real-time data analysis. This revolutionary approach leverages the power of machine learning and big data to identify profitable trading opportunities that might be missed by human traders. By analyzing vast amounts of data in real time, these AI systems can detect patterns and trends that are invisible to the naked eye, making split-second decisions that can lead to significant financial gains. Imagine an AI system that can analyze news sentiment, identify market trends, and execute trades in milliseconds, all without human intervention. These systems are designed to process information from a variety of sources, including news articles, social media posts, and financial reports, to gauge the overall sentiment of the market. By doing so, they can predict how certain events might impact stock prices and make trades accordingly. This level of automation not only increases efficiency, but also reduces the emotional biases that often affect human traders. This is the power of AI in trading. These advanced systems can execute thousands of trades in a fraction of a second, far surpassing the capabilities of any human trader. They can also continuously learn and adapt to changing market conditions, improving their performance over time. This adaptability is crucial in the fast-paced world of financial markets, where conditions can change rapidly and unpredictably. These AI-powered systems can process vast amounts of information from news articles, social media feeds, and financial reports to identify patterns and predict market movements. By integrating data from multiple sources, they can provide a more comprehensive view of the market, helping traders make more informed decisions. This holistic approach to data analysis is one of the key advantages of AI in trading, as it allows for a more nuanced understanding of market dynamics. This enables traders to make faster, more informed decisions and potentially gain an edge in the market. By leveraging AI tools, traders can quickly analyze large datasets, identify trends, and execute trades with greater precision. This not only enhances their ability to capitalize on market opportunities, but also helps them manage risks more effectively. The speed and accuracy of AI-driven trading can be a game changer, especially in volatile markets where timing is everything. However, algorithmic trading also raises concerns about market volatility and the potential for unintended consequences, highlighting the need for careful regulation and oversight. While AI can enhance trading efficiency, it can also exacerbate market fluctuations if not properly managed. For instance, rapid large-scale trades executed by AI systems can lead to sudden price swings, creating instability in the market. Therefore, it's essential for regulators to establish guidelines that ensure the responsible use of AI in trading, balancing innovation with the need for market stability. To address these challenges, financial regulators are working on developing frameworks that can effectively govern the use of AI in trading. These frameworks aim to ensure that AI systems are transparent, accountable, and operate within predefined ethical boundaries. By doing so, they can help mitigate the risks associated with algorithmic trading while still allowing for technological advancements that can benefit the market as a whole. Collaboration between AI developers and financial analysts is crucial in creating robust and reliable trading systems. By combining their expertise, they can design algorithms that not only perform well under normal market conditions, but also have safeguards in place to handle extreme scenarios. This collaborative approach ensures that AI systems are both innovative and resilient, capable of adapting to the ever-changing landscape of financial markets. As we move forward, the integration of AI in trading is expected to become even more sophisticated, with advancements in machine learning and data analytics driving further innovation. Traders who embrace these technologies will likely have a competitive edge, as they can leverage AI to gain deeper insights into market trends and make more strategic decisions. However, it's important to remember that while AI can provide valuable tools, human judgment and oversight remain essential in ensuring that these systems are used responsibly and effectively. In conclusion, AI is transforming the landscape of financial markets, offering new opportunities for traders to enhance their performance and achieve better outcomes. By harnessing the power of AI, traders can navigate the complexities of the market with greater confidence and precision. However, the successful integration of AI in trading requires a balanced approach that combines technological innovation with prudent regulation and human oversight. This way, we can ensure that the benefits of AI are fully realized while minimizing potential risks. Risk assessment is crucial in finance, as it helps organizations identify, evaluate, and prioritize potential threats to their financial health. This process involves a thorough analysis of various factors that could impact the financial stability of a company, such as market volatility, credit risks, and operational risks. By understanding these risks, financial institutions can develop strategies to mitigate them and protect their assets. In recent years, AI has been revolutionizing how we identify and manage potential threats. Traditional risk assessment methods often rely on historical data and human judgment, which can be time-consuming and prone to errors. However, AI-powered tools can process vast amounts of data at incredible speeds, providing more accurate and timely insights. AI-powered risk analysis tools can analyze massive datasets of historical financial data, economic indicators, and even social media trends to identify potential risks and predict future market events. These tools use advanced algorithms and machine learning techniques to detect patterns and anomalies that might be missed by human analysts. For instance, by analyzing social media trends, AI can gauge public sentiment and predict how it might influence market behavior. This can be particularly useful in anticipating market reactions to major events, such as political changes or natural disasters. Additionally, economic indicators like GDP growth rates, inflation, and unemployment rates can be monitored in real time to provide a comprehensive view of the financial landscape. These tools can identify patterns and anomalies that humans might miss, providing a more comprehensive and accurate assessment of potential risks. For example, AI can detect unusual trading patterns that may indicate fraudulent activities or market manipulation. By flagging these anomalies early, financial institutions can take proactive measures to address them before they escalate. From credit scoring to fraud detection, AI is transforming various aspects of financial risk management. In credit scoring, AI algorithms can analyze a wide range of data points, including payment history, credit utilization, and even social media activity, to assess an individual's creditworthiness more accurately. This allows lenders to make more informed lending decisions and reduce the risk of defaults. AI is helping financial institutions to make more informed lending decisions, prevent financial crimes, and ensure the stability of the global financial system. In fraud detection, AI can monitor transactions in real time and identify suspicious activities that may indicate fraudulent behavior. This enables financial institutions to respond quickly and prevent significant financial losses. Ensuring the stability of the global financial system is another critical area where AI is making a significant impact. By continuously monitoring global financial networks and market trends, AI can provide early warnings of potential systemic risks. This allows regulators and financial institutions to take preemptive actions to maintain stability and prevent financial crises. However, as AI systems become more complex, transparency and explainability become increasingly important. It is crucial for financial institutions to understand how AI algorithms make decisions to ensure that they are fair, accountable, and free from unintended biases. This is particularly important in areas like credit scoring and fraud detection, where biased decisions can have significant consequences for individuals and businesses. We need to understand how these systems make decisions to ensure fairness, accountability, and prevent unintended biases. Ethical considerations must be at the forefront of AI development in finance. This includes implementing robust governance frameworks, conducting regular audits, and ensuring that AI systems are designed and tested to be fair and unbiased. By doing so, we can harness the power of AI to enhance financial risk management while upholding the principles of fairness and transparency. AI is not just for Wall Street giants. It's also transforming personal finance and investment management. Robo-advisors powered by AI are making personalized investment advice and portfolio management accessible to everyone. These digital platforms use algorithms to create and manage diversified investment portfolios tailored to an individual's risk tolerance, financial goals, and investment timeline. AI-powered portfolio management can optimize asset allocation, rebalance portfolios automatically, and even adjust investment strategies based on real-time market conditions. This makes investing more efficient, transparent, and accessible to a wider range of investors. However, it's important to remember that AI is a tool, and its effectiveness depends on the quality of the data it's trained on and the human expertise guiding its application.